Hi guys, this is Vitaly with AFT Dispatch and A2C Logistics, and in today's video I want to talk to you about a very important aspect of the trucking industry, insurance, namely commercial auto liability insurance. Now in the second portion of this video, we're going to cover some of the loads that we've successfully booked for our customers, which consist of leased owner operators and carriers operating under their own MC authority using our truck dispatch services. As a reminder, make sure to subscribe to the channel, hit the notification bell. You don't want to miss these segments. This is a weekly segment where we look over something important, something that's going to help you in your trucking business, and we look over the loads, the rates, the commodities, the lanes, and how well the customers have done over the previous week. So definitely hit that notification bell, hit the subscription box. You'll definitely be glad you did that. Now let's go ahead and jump into the topic of the day, which is insurance. Obviously, insurance is on everybody's mind. It's a very high expense. The American Transportation Research Institute has found that to be the second highest expense in trucking companies, right after diesel expenses and trucker pay or driver pay. And obviously we had a very difficult year last year. 2019 was tough, but 2020 blew that right out of the water with the coronavirus pandemic, with the low rates, low freight demand, skyrocketing accident payouts, insurance increases across the board. And these increases are expected to continue throughout 2020 and all the way through 2021 and probably beyond that. And as I mentioned, it's the second highest expense, and if that continues to increase, then we're going to have to pay a pretty penny for coverage. Now, these increases, we've seen a 12% increase over the last year to now, and some companies that have had one or more serious accidents have seen those increases go from 35 to 45%. So very large increases in premium. Now, in fact, the median verdict amounts, which is the payouts to folks who sue trucking companies after accidents, went from $23 million to $44 million. And the same research institute has actually found that 1 million and higher awards have increased over the last 14 years, going back to 2006. Now, in 2019, Illinois Democratic Representative Jesus Chuy Garcia actually proposed an increase of going from the FMCSA mandated $750,000 insurance policy to $5 million. That would be an increase of 550%. And the same congressman is actually now asking for an increase of going to $2 million. So the first one didn't pass. Now he's asking for $2 million insurance policies, which would be a 167% increase. And by the way, that passed 37 to 27 vote in the House Transportation and Infrastructure Committee. And so that's moving forward, and hasn't become a law yet. But here's the thing. The Illinois representative, Mike Bost, you might have heard the name, he produced the Bost Amendment 194, Bost Amendment 194, which was designed to throw out Chuy's $2 million proposal. But unfortunately what happened was that the Bost Amendment was the one that was thrown out instead. And Chuy's rationale has been that there have been no increases in insurance premiums or insurance coverages since the 1980s, since it was implemented and put into law, and that hasn't been adjusted for inflation, which is what it's doing is, in turn, is putting a large burden on families of those who have been in these accidents and on the families who have to take care of those folks because of increased medical costs. And by the way, just so if you didn't know this, but the smaller your fleet, actually the more expensive your insurance. It turns out that if you have a small fleet of 5 trucks or less, you're actually paying more in insurance than companies that have 1,000+ trucks out there. So just something to chew on. But I'd like to know what your thoughts about this are. What happens to a carrier, an owner operator whose insurance goes from $1,000 a month to $2,000 a month, from $2,000 to $3,000 a month? Who eats up the cost? Who ends up having to flip the bill on this, right? Is it the carrier? Will the shippers pay more money to offset the cost of higher insurance premiums? If they do, will the brokers, will they pass on that additional amount of money to us, or will they just pocket the difference and basically enrich themselves? Who's going to benefit from this, and who's going to be the one stuck with the bill at the end of the day? So I definitely would love to hear from you guys. Please leave a comment in the bottom in the comment section, and please like the video. Make that button blue. Turn that button blue all the way. and share the video with your friends on Facebook. I know truckers have a lot of friends that are also truckers who would benefit from these videos. And hit the notification bell. Make sure not to miss out on these videos. But I definitely would love to hear from you guys. Who would benefit from this? How do you think this will go forward? What kind of an effect will this have on the trucking industry into the future? How will this affect truckers, owner-operators, company drivers out there, and of course, carriers? Anyway, without further ado, let's switch over the camera. Let's look at some of the loads that we booked this week, and let's take a look and see how well we did, shall we? Talk to you in a moment. Welcome back. Let's take a look at some loads now, shall we? Now, the following loads are all dry van loads. They were ran by a solo driver in a single week, running from Friday to Friday. His first load started out in Seguin, Texas. He took a load of furniture at 40,000 pounds, took him over to Madison, Alabama. That's 913 miles, ran at $278 a mile. He got a crazy rate of $2,537.50. Now, anytime you see numbers like that, you know dispatch is working very hard to get you every dollar that they can from the broker. Now, from there, they took a load out of Lawrenceburg, Tennessee, and took it to Newark, New Jersey. It was a load of household goods at 42,000 pounds, 950 miles at $279 a mile. That's $2,650. The following load after that was also out of Newark, New Jersey, so zero deadhead there. Took that load to Rome, New York. It was a load of apple juice, very light load at 25,000 pounds. That's 239 miles at $377 a mile at $900. From there, they went upstate to Rochester, picked up a load, took it over to Chantilly, Virginia, 382 miles, $314 a mile at $1,200. That was another light load of palletized Monster energy drink, 25,000 pounds. And when I ran his numbers, he actually had a really fantastic week. If you look at it, $7,287.50 is what he grossed. And he ran 2,484 miles, which is quite admirable. Now, what he got was $293 a mile on all those miles. You couldn't ask for much more than that. That is a really good week. Next, we got South Bend, Indiana. 1 pick, 3 drops. It's frozen pork at 30,000 pounds. All the drops are in Massachusetts, going to Hatfield, Mass, Taunton, Mass, Plimpton, Mass, and Andover, Massachusetts. It was 1,020 miles at $363 a mile. In those 3 days, he ran $3,700. Not bad at all. Running to East Coast, not bad at all. Took another load out of Burlington, Wisconsin. Going out, it's a 1 pick, 3 drop, all drops in Wisconsin. Jackson, Wisconsin, Madison, Wisconsin, and Eau Claire, Wisconsin. This is 310 miles. This driver likes to stay in the Midwestern section of Wisconsin, Illinois, Chicago. And this was a very light load of frozen groceries at 25,000 pounds. It was 310 miles. Finished up by noon the following day, booked at $1,740, only 310 miles at $561 a mile. Now, next load, he went out to Prior Lake, Minnesota, took a load to Wheeling, Illinois. This was a load of frozen dough, 27,000 pounds, and that was at 410 miles, $317 a mile, booked at $1,300. From there, he went out to Chicago, took a 1 pick, 3 drop load out to Dixon, California, Marysville, California, and a final in Woodburn, Oregon. This was a load of fresh meat, 35,000 pounds, obviously a reefer, 2,630 miles, booked at $1.90, 5,000 bucks. Now, this is a great example of how it should be done. You're taking a load out of the Midwest, going out to a great area, going out to Oregon at $1.90 at lots of miles. You better bet he's going to come out of Oregon at a very good rate next week. Then we're taking a load out of Simpson, South Carolina, going to Ogden, Utah, my neck of the woods. This is a load of consumer goods. These are all van team runs. This is a team husband and wife. We talked about them in the last segment, released last week. 1,978 miles at $202 a mile, booked at $4,000, going out to Ogden, Utah. From there, they deadheaded out to Evanston, Wyoming, and took a load to Columbia, Pennsylvania. That's another 1,987 miles. It was a load of hair product. Now, these guys are running all loads under 30,000 pounds. That's their request for us. Every one of these loads is under 30,000 pounds. They're asking for highest dollar amounts and highest miles possible. As we'll see, dispatch has done a great job in making sure that happens. So they took a load to Columbia, Pennsylvania for 4,500 bucks. That's $226 a mile, 1987 on the miles. From there, the dead headed out to Aberdeen, Maryland. Took a load to Joplin, Missouri. Joplin, Missouri was a load of plastic packets, 1,137 miles, $1.67, booked that at $1,900. Next load came right out of Joplin, Missouri, 0 deadhead, right to Oswego, Illinois. Booked a load at 546 miles. It was a load of shakes going out to Oswego at $220 a mile, $1,200. When I ran their numbers, they booked $11,600 worth of freight. That was gross amount at $205 a mile average with only 170 miles empty. Did a great job. Next, we have Spokane Valley, Washington, going out to Janesville, Wisconsin. This is a load we did last week as well. Those of you who follow, remember this load. It was booked at $1.70 at 1,651 miles. It was one pick, one drop, light load at 27,000 pounds, going out at $2,800. Now from there, they went to Prairie du Chien, Wisconsin, going to Loveland, Colorado. This was booked at $290 a mile, 861 miles, one pick, one drop, extremely light load, 4,000 pounds of aluminum tubing. The trailer was almost all empty. Went out to Colorado at $2,600. And the best part is this driver ran all week on recaps, used up all of his hours, and had a fantastic run. Now, leave the best for last, as they say. My favorite run here of the week was Sidney, Nebraska. They took a load out of Sidney. Those of you who run in Sidney know that there's not much choice coming out of Sidney, Nebraska. I mean, you can go to Denver, you can go to Wyoming. Neither one is much better than Sidney. They took a load to Hermiston, Oregon. They booked it. It's 1,079 miles. It was a one pick, one drop, 31,000 pounds of just general dry product. And they booked it at $232 a mile. That's $2,500 going out to Hermiston, Oregon, just like in the previous case, Oregon. Fantastic rate. This was a dry van. The other one was a reefer. In either case, they're going to have a great week because they're taking great money going to Oregon, and they're going to definitely come out of Oregon for some fantastic rates. Now, if you want to get the same type of loads, you're more than welcome to get in touch with us. We work with owner-operators that we lease on. We also work with carriers operating under their own MC authority. If you're sick of doing packets, negotiating and haggling with brokers, dealing with insurance companies to get certificates issued, or dealing with billing and invoicing, certainly give us a call. Please like this video. Would really appreciate that. Leave your comments. As I mentioned, we'd really like to start a conversation, get an idea from the very beginning of this video, and see what you guys, what your thoughts are. Like this video. Please share it on social media such as Facebook and any other platform that you enjoy. And if you have any questions, all the information is in the description box below. You can give us a call, visit our website, call or text 801-448-6363, or visit our website at aftdispatch.com. Until next time, guys, stay healthy, be wealthy. Take care.